Your roadmap to Sharia banking and finance. What kinds of Islamic mortgages are there? There are three primary Sharia-compliant mortgages: Musharaka, partnership; Iljara, lease; and Mudaraba, profit, which are also available but more frequently utilized in business transactions. Musharaka is the most popular for residential purchases. Musharaka. This arrangement, also called diminishing musharaka, involves the home buyer and the lender jointly owning a portion of the property. You can purchase more of the bank stake with each repayment, because your monthly payments are split into portions for capital and rent. A usual period is approximately 20 years long, which is comparable to the term of a mortgage. The term shrinking, which refers to the bank's portion diminishing over time, alludes to your rent decreasing as your share of the property increases throughout this time. You will eventually possess the entire property. This operates very similarly to a conventional mortgage repayment plan, but in order to comply with Sharia law, the interest is exchanged with rent. Mudaraba. This sort of Islamic mortgage works a little differently in that the lender buys the property and then sells it back to you at a greater price, as opposed to charging your rent. They let you pay them in equal installments over a certain period of time, which is often 20 years. As long as you make your monthly payments on time, you are seen as the homeowner in this situation rather than being in a partnership with the lender. Mudaraba is more frequently used to purchase commercial property in South Africa than it is to buy homes, such as buy-to-let rentals or office spaces. However, it is more frequently utilized for all types of real estate purchases in the Middle East and the Far East. Iljara. Iljara, which translates to lease, refers to a situation where the bank buys the asset you wish to buy and then leases it back to you. Similar to a conventional interest-only mortgage, however, instead of interest, you pay a rental fee to lease the property. For instance, on a 1 million rand house, you put down 200,000 rand deposit. The lender purchases the property with the remaining 800,000 rand. For a specified period of time, you pay rent on the lender's 80% interest in the property. You must pay back the lender the remaining 80% at the conclusion of the term in order to fully acquire their ownership interest in your home. Since the majority of purchasers would have to resell the property at the conclusion of the lease period in order to repay the loan, this sort of borrowing is not frequently employed for residential purchases. However, because you are not repaying any of the capital, the monthly repayments will be lower than for a diminishing musharaka, making it popular for the purchase of buy-to-let properties. The amount borrowed. Is my Islamic mortgage in accordance with Sharia? Islamic mortgage lenders employ the advice of scholars who are knowledgeable about both Sharia law and Islamic finance to ensure that their products are compliant with the law. Additionally, they conduct routine assessments in collaboration with Islamic scholars to make sure that any alterations to the items are evaluated and approved by Sharia law. Customers who take out an interest-bearing mortgage have the same protections and entitlements as those taking out an Islamic mortgage because both are governed and regulated by the FSCA. www.muslimfin.com